Today on the Roxom Report London, the US and China have agreed to a trade plan during their talks held here in London. Meta is restarting their AI bid. Chancellor Rachel Reeves is setting out her spending plan. News about the quantum threat to Bitcoin and more today on the Roxom Report London. I'm Ione Butler and welcome to the Roxom Report London. We are coming to you live from Roxom Studios in the UK's capital. Today we have a special guest joining us, Susie Violet Ward from Bitcoin Policy UK. Susie, how are you this morning?
Yeah.
My pleasure. Thank you. And actually, it's not this morning, it's afternoon. So we will be speaking with you a good amount because you work for or run a fantastic organization called Bitcoin Policy UK. Would you mind sharing a little bit about it, please?
Yeah, absolutely. So we want to advocate for anybody in the UK that wants to buy, hold, or sell Bitcoin. We would like sensible regulations so that businesses can operate here at a minimum and it's not being driven overseas. The innovation happens in the UK as we have a history of computer science and financial services, and to make sure that consumers are not harmed in the process, because currently the regulation isn't really fit for purpose.
Excellent. Really necessary work that not enough is being done about. So thank you for sort of spearheading that and making that happen. Right, well, we'll get into our first news story and then I'll come back to you and we can discuss those news segments. So we're going to kick things off with the most crucial piece of news you need for today. This is our segment that we like to call Top of the Block.
Okay.
It was a big moment in global trade this week. And yes, it happened in London, right here in London, of all places. The US and China, the two titans of modern manufacturing, have just shaken hands on a new trade framework. No fireworks, no red carpets, just 2 days of serious talks at Lancaster House and a cautious agreement in principle to stop throttling each other's exports, which frankly is a bit of a relief for all of us. Now, if you're thinking, didn't they already have a truce? Well, yes, they did. Back in Geneva last month. But then China didn't follow through on rare earth exports. The US retaliated with chip bans, visa threats, the whole lot, and it escalated fast. So why does this matter? Because we're not talking about socks and soybeans. We're talking about rare earth minerals, the stuff inside everything from your smartphone to fighter jets, and the software that designs the semiconductors powering AI. So what's actually in this new framework? Well, unfortunately, we don't have the details yet, but both sides hint at rolling back key export controls. China will restart rare earth shipments. The US, in turn, might ease restrictions on some chip technology. So in summary, China's holding the cards on rare earths with a near total monopoly, and the US has got the edge in semiconductor design. These aren't just trade issues, they're national security flashpoints. Both sides will need to sign off, and if they do, we might see the pressure ease for now. But let's be honest, this is less a peace treaty and more a pause. The tech rivalry isn't going away, and the trust, well, that's still very much under construction. Watch this space, because the next twist in the US-China tech standoff could land before the ink even dries. Okay, Susie, heading over to you to discuss this piece of news and, in a way, how it relates to Bitcoin and the price of Bitcoin, I guess more specifically. You know, the Bitcoin tends to thrive when there's uncertainty. This is more of a pause. It isn't peace. Bitcoin's sort of, the price is continuing to go up at the moment. Do you have any thoughts on how this back and forth China-US trade deal might be impacting Bitcoin?
So it's Bitcoin is a safe haven, and you're right. People do run to Bitcoin when there's chaos. You're correct. This isn't peace. It's just a tactical timeout. And China is still holding the mineral cards, and the US still has the chip designs, and they're both playing chess with the future of AI. And for Bitcoin and tech supply chains, like it's more of the same. It's politicized and just one tweet away from chaos.
Mm-hmm. Yeah. Uh, I- I'm trying to think throughout this trade war there was a bit of a blip, I think, at the beginning with Bitcoin, but it's continued to rally despite this sort of back and forth since.
I,
Is that,
I
does
don't
that
think
make
this really matters so much. I think there's a lot of other things that are going on which would more affect the Bitcoin price. I mean, US Treasury, Bitcoin Treasury companies, they're buying Bitcoin. There's so many companies that are now starting to put Bitcoin on their treasuries. Long-term holders are going up. So you've got MicroStrategy that keeps buying, and Saylor says he's never selling. Then you've got the actual long-term holders, their supply isn't moving. You've got Bitcoin being held in ETFs, and although there are some sales, that often stays there. So as the long-term holder base grows, supply crunch is going to be inevitable and the price is going to go up. And then you've got the instability on top of that, and it's a safe haven asset.
Mm-hmm. Thank you. Well said. Well said. And actually, to those points that you made earlier, we'll be covering some other stories exactly related to that. Let's take a quick commercial break. We'll be back with the Market Watch. We'll see you soon.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back, everyone. Let's take a look at how the markets are performing right now. So we're going to start with the European stocks, see how they're moving. In France, we have the CAC 40 at 7,804 points. That's up just slightly. DAX Performance Index at 24,017, again up 0.1%. In the UK, the FTSE 100 index at 8,853, up just a tiny amount. And we've got Spain's IBEX 35 at 14,146. That's down 0.5%. Moving on to the US stocks. How are they looking? We've got the Dow Jones Industrial Index at 42,866. That's up 0.25% today. The Nasdaq Composite at 19,714, up 0.63%. The S&P 500 at 6,038. That's up 0.5%. We've got Coinbase down 254 slightly. MicroStrategy 391 down slightly, just 0.25%. Nvidia Corp up almost 1% to 143, and Tesla sitting at 326. So it's up 5.67%, making a slight comeback there. Now moving on to the good stuff, crypto. Let's see how that's looking. Starting with XRP at $2.31. That's up slightly. Ethereum, $18.29, down 1.3%. Cardano at 71 cents, down slightly. And Bitcoin today is sitting at 109,299. That's just down slightly, almost down 1%. Let's dig a little deeper into what's been going on in the Bitcoin world. So Bitcoin has neared record highs again. It's back near its all-time high of 112,000, up 50% since April. The White House Bitcoin bombshell is incoming. A major announcement on the US strategic Bitcoin reserve is imminent, according to Bo Hines, with President Trump reportedly preparing an extraordinary update. Trump's Bitcoin reserve vision is taking shape. Trump's promise from the 2024 campaign to create a national Bitcoin reserve is becoming reality, with strategies in place to grow it beyond 200,000 BTC without using taxpayer dollars. US El Salvador Crypto Alliance is brewing. Top US crypto advisors have met with El Salvador's President Bukele to explore collaboration on Bitcoin, stablecoin, and digital assets. And a push for a $1 million Bitcoin reserve. Senator Cynthia Loomis says Trump backs her Bitcoin Act, aiming to buy 1 million Bitcoin over 5 years using existing federal funds, potentially reshaping global crypto policy. All right, that's the Bitcoin and market price roundup. Next up, it's the global gist. It's the part of the show where we break down the day's top stories in finance, tech, and Bitcoin from around the globe. From Bitcoin buzz to big moves in global markets, we're keeping it fun, fresh, and easy to follow. Here's the global gist. Mark Zuckerberg, long known for playing the long game and making cautious bets, is now going all in on artificial intelligence, and he's doing it with the urgency of a high-stakes poker night. Reports suggest he's preparing a staggering $14 billion investment in Scale AI. Not a full acquisition, but a major strategic stake in one of the most influential AI startups in the world. The reason? Zuckerberg wants Alexander Wang, the 27-year-old MIT dropout and CEO of Scale, to help Meta finally catch up in the AI race. Zuckerberg is done waiting. He's reportedly grown frustrated with Meta's internal AI efforts, including the highly promoted but underperforming Llama 4, which still lags behind OpenAI's GPT models and China's DeepSeek. So now he's backing Wang, a self-described wartime CEO, who's not only a technical standout, but who has secured major contracts with the US Department of Defense and built a dominant position in AI data labeling. The move follows a pattern set by other tech giants: Microsoft with OpenAI, Google with Anthropic. Skip the complications of an outright buyout, avoid regulatory scrutiny, and instead buy strategic influence, and more importantly, talent. If this deal is finalized, Wang is expected to lead a new AI research division within Meta. It's a bold move, and one that signals Zuckerberg's growing impatience. Meanwhile, over on the crypto front, Meta has firmly rejected a shareholder proposal asking whether Bitcoin could be used as a treasury reserve asset. And by rejected, we mean overwhelmingly. The vote failed 1,221 to 1. Why? Because Meta holds 72 billion in liquid reserves, a safety net for economic shocks, pandemics, or worse. Bitcoin, for all its potential upsides, remains far too volatile for most corporate treasuries. As one professor bluntly put it, calling Bitcoin a treasury asset is lunacy. Oof, scandalous. Still, companies like MicroStrategy have gone all in, essentially turning their stock into a proxy Bitcoin ETF and delivering massive returns. So while Meta remains cautious for now, the momentum is shifting. And with Zuckerberg making aggressive moves in AI and keeping a close eye on crypto, don't be surprised if Meta's next pivot comes sooner than anyone expects. Okay, a couple of things to talk about there, Susie. I think the most juicy one would be Zuckerberg's and Meta's rejecting having Bitcoin as a treasury reserve asset. What do you make of that?
There are hundreds of companies coming on board with this because they can all see the writing on the wall. It's the safest asset. It's the best performing asset of the decade. So with his AI pivot, it's like it's classic tech, big tech behavior, follow the hype, but ignore the hedge. So he's ignoring the hedge when it comes to dismissing Bitcoin as a hedge against inflation and currency risk and systemic instability. So while they're pouring billions into the AI hype and rejecting Bitcoin, there is going to be no financial resilience for them. So I think it's a big miss.
I would agree with you there. I mean, even just a billion, it doesn't have to be all in,
No,
but something. It's
just a little bit.
Exactly. That shows that there's zero trust there. When they have the reserves, they have the money to do something with it. I feel like Zuckerberg misses the point quite a lot. I remember a few years ago with his VR push, the metaverse, it was all about this. And where has that gone? Nowhere. I mean, jumping on the AI bandwagon, that is the future. I can't see that just somehow imploding and nobody being interested in AI. That's happening. But yeah, it does seem like he's scrambling to keep up at this point, and then also delivering another miss in terms of Bitcoin. Yeah,
You've
interesting.
nailed it. Absolutely.
Yeah. And okay, let's have a look at our next story. This one is a juicy one. So, quantum computers, yes, the kind that once sounded like science fiction, are now being flagged as a genuine threat to crypto by none other than BlackRock. And not a mild theoretical concern. We're talking existential risk. Now, if quantum machines ever fulfill their potential, they could slice through the current encryption standards with ease, including the cryptography that underpins Bitcoin's security and scarcity. So you'd expect some panic in the markets, right? A little volatility. Not even close. Bitcoin is holding steady above $100,000, with traders eyeing fresh all-time highs as if nothing has changed. Enter Michael Saylor, the ever-unflappable Bitcoin evangelist and chair of MicroStrategy, who appeared on CNBC with a familiar message. Don't panic. His take? The quantum threat is mostly market spin, used to drum up interest in the latest quantum yo-yo token. Those were his words. Saylor's argument is straightforward. When the time comes, Bitcoin will simply update its code base, like any other evolving technology. He even added a bit of business logic to the mix, pointing out that companies like Google and Microsoft have no incentive to release quantum machines that break encryption. Doing so, he argued, would undermine their own infrastructure, the global financial system, and possibly Western civilization itself. That said, not everyone is quite so sanguine. Presto Research recently issued a report warning that the crypto industry is significantly underprepared for a post-quantum world. The concern is real enough that developers are already discussing hard forks and new wallet designs to future-proof Bitcoin. One startup, BTQ, is even building crypto hardware specifically designed to operate securely in a quantum environment. And yet the market remains unmoved. No sell-off, no flight to safety, no noticeable hedging, just steady optimism. That could be reckless, or it could be a sign of growing confidence in Bitcoin's resilience and its ability to adapt when the moment arrives. Quantum computing may well be the ultimate boss battle for crypto, but for now, Bitcoin seems to be leveling up, almost like it has a cheat code. Okay, Susie, I'm very curious to get your thoughts on this. I don't know enough about I'm reading about this quantum threat, but with what Michael Saylor was talking about, do you have any idea about updating the code base? How easy or realistic something like that would be? Could you give us some insight?
Even before you get there, I think it's really important to point out the difference between Bitcoin and crypto, because Bitcoin is a decentralized protocol and it's never been hacked. It's the only system that's had 99.9% uptime and has never been hacked.
Sorry to jump in there. I think the threat is that people's wallets, the quantum computing can easily run enough combinations to break into people's wallets. So I think that's the
yes. So I was kind of so I was going to say that the crypto is completely different. So that would probably be very easy to hack. I would say that the crypto would be a lot easier than Bitcoin if we were going to put it into stages. But then I look at all the current threats that we have in the current financial system. Like we talked last week about the Marks and Spencers, HMRC have just lost 100,000 customer details to criminals. The whole, once Bitcoin gets hacked, the whole planet is screwed. So I think there are lots of things that will break before we even get to that stage, and we'll be in a much worse situation before we worry about things like that. I just think that the levels of concern are not there for me yet to be concerned about that.
You make a great point, because yeah, you're right. If people's Bitcoin wallets are being hacked and broken into, what's to stop any
their banks are screwed?
Being hacked? Yeah, and
everything is like absolutely everything that they've got that's financial. That will just be the last thing to break.
Yeah, that's a great point. And then to Michael Saylor's point too, with these tech companies, they're not going to want this technology out there when it has the potential to destroy their own businesses. So yeah, it's going to be an interesting time. I think the time frame between when we've got these big breaks in quantum computing is between 10 and 20 years, which is not very long. No. So yeah, definitely not sure what is being done, if enough is being done by sort of governments to
Oh,
protect us from this.
no, they can't even protect us from data leaks and privacy. I mean, that's even coming into, it's creating real world harm. They're collecting so much information on us, and they can't even keep us safe from that. So yeah, they won't look after us. You've got to look after yourself.
Yeah, the more we're talking about it, it does seem, to side with Michael Saylor there in that it's just a bit of marketing hype. It's like it is, and it hasn't shaken, it seems like, Bitcoin in any way, because people can perhaps see through the hype. And yeah, making a good point of like, well, what about everything else?
Everything else.
Yeah. Thank you. That was yeah, really helpful insight there that helped me get a better sense of things. Okay, we'll cut to a quick commercial break, and we will be back with some more global gist stories.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back, everyone. We've actually got some breaking news in today, right now. And that is that CNBC analysts are projecting Bitcoin to reach new all-time highs above $130,000. The CNBC analyst Todd Gordon suggests that cryptocurrency is primed to surpass its 111,000 all-time high and boom towards the $130,000 mark, according to weekly chart analysis. With a projection level of around 135,000 as their target. Woo, that's exciting news, is it not?
Oh, yeah, I mean, we all know it's going to get there, don't we? 130,000, like, what's that? Of course it's going to do that. I mean, June's only been up 3% so far, so it's quite disappointing. And the Bitcoin network activity has dropped off, which usually kind of indicates a little bit of a calm before the storm. So I am feeling like there's going to be another huge leg up. And going back to what we were talking about earlier with long-term holders growing, the Bitcoin ETF, BlackRock's ETF, has just become the fastest growing ETF in history. It was 5 times faster than how gold grew at that time, although I'm not sure if they adjusted for inflation. But it's huge. And when you think about all of the institutions buying, we discussed Bitcoin treasuries are buying, long-term holders aren't moving, Michael Saylor's definitely not selling. And this is the only asset on the planet that has a finite supply. So there are lots of Bitcoin that's just being taken off exchanges. And once that's gone, it's gone.
Yeah.
We're looking at a supply crunch.
Yeah. Woo, gonna shoot to the moon. I don't know whether this article that we're kind of looking at here says exactly when. And I think that the reasons for it, this spike, is definitely the points that you made. Also, Trump's support, I think, has a big part to play. The US wanting to buy Bitcoin for its treasury, all of that. It would be good to know when they're thinking this 130. It might get to 130. Do you have any guesses?
Well, look, we've just come out of quite a sharp V-shaped recovery. Like 6 weeks ago, we had a bit of a crash, and now it's all popped back up. I think soon. I mean, it's really difficult.
We'll put a day on it. We can see if we got it right.
Look, I think it's going to go up a lot more in June, and all the data is pointing towards some sort of rally that's going to be coming. So it wouldn't surprise me if it was in the next couple of weeks.
Excellent. All right. Well, we'll speak to you in a couple of weeks and see. Not to put any pressure on you, but I would be great.
I don't like making price predictions.
I mean, it's hard to. It's a guess, a guess at this stage. But yeah, we can definitely see what happens. I would agree. It has the potential, definitely, this month to hit those highs. Excellent. Okay, moving on to our next global gist story. less exciting, I'd have to say, after the high of of that breaking news story there. But a significant moment in British politics today as Rachel Reeves takes to the dispatch box to present the government's spending review. This is her first comprehensive review, expected to outline the fiscal landscape for the coming years, detailing who will receive increased funding, who will face cuts, and where difficult trade-offs will be made. To begin with the headline priorities, the NHS and defence are set to be the primary beneficiaries. This comes as no surprise, given the ongoing pressures on the health service and the heightened global security environment. However, while these departments receive increased allocations, other areas are likely to experience real-term reductions. The Institute for Fiscal Studies has cautioned that sharp trade-offs are unavoidable, which essentially means some budgets will face significant tightening. In a notable development, Reeves is also anticipated to announce a $39 billion investment package aimed at expanding social and affordable housing over the next decade. This is a substantial commitment and signals a clear effort by Labour to address the country's long-standing housing shortage. The ambition is commendable, but as always, implementation will be key. Closer to everyday life, the review confirms that the £3 bus fare cap in England will remain in place until 2027, a quietly popular measure that many commuters will welcome. Additionally, following a policy reversal, 3/4 of pensioners will continue to receive winter fuel payments, and free school meals will be extended to an additional 500,000 children in families on universal credit. Today's spending review is ambitious, but it's also a balancing act. Chancellor Reeves faces the challenge of directing funds where they are most needed without compromising fiscal responsibility. Ultimately, the critical question is whether the public will view this as a prudent allocation of resources or merely a postponement of difficult decisions. Now, I think this is interesting, and I'm going to go to our producer, Anton, to see at what when is this announcement happening? Do you know, has it happened yet? Because I would be curious to see how it impacts the markets. I don't think it would really shake Bitcoin in any way, but I do think back to the Liz Truss's sort of announcement and her budget, well, not hers, I forget the name of the guy who proposed that, and how it instantly had such a negative impact.
Kwasi Kwarteng?
Yeah, that's his name.
Yeah.
Yes, thank you. What do you think might come of this? How it might affect the markets here in the UK? Do you think it will have any impact on the price of Bitcoin? Might shake it in any way?
No, not Bitcoin. No, absolutely not. No. So, yeah, I mean, I don't think anyone really pays attention to the UK because we are so far behind. I think we're a bit of a laughing stock on the global stage, really, unfortunately.
In terms of Bitcoin, you mean? Everything.
I think we're falling behind in a lot of areas, but yes, especially with Bitcoin, yes, but in many other areas as well. We're not really keeping up with innovation, technology, you know, our regulation is shocking. We're driving businesses out. We're harming consumers, all that jazz. You know, we're not doing very well generally, but Reeves is walking a tightrope. She really is. She's trying to look responsible while trying to transform the country. I don't know, we're in a bit of a debt spiral anyway. All of this spending costs money. I mean, 77%, I believe, is the tipping point for debt to global GDP when you're just never going to get out of the debt spiral that you're in. So I think that the only solution that we've got is to debase our currency. They obviously cannot tell you that, but that's kind of what's happening. So they're just going to be spending lots of money, debasing our currency, stealing from us through inflation. And it's just all smoke and mirrors as far as I'm concerned.
Yeah. So another very valid reason for why the UK should adopt a Bitcoin policy.
Absolutely.
Yeah. Anton, does it say anything about, has this announcement happened? Have we seen any shift in the markets? Okay, we got word from our producer. No announcements yet, but we can follow up tomorrow and let you know what happened there. Okie dokie. Moving on to the next story. The top enforcement official at the US Consumer Financial Protection Bureau, that's the CFPB, has just quit, and she did not go quietly. Cara Peterson, who's been with the agency since the start, fired off a scathing farewell email saying she's never seen the Bureau's mission so under attack And she's not talking about red tape or office politics. She's talking about the Trump administration actively dismantling the agency's core function, which is protecting consumers from dodgy financial practices. So let's rewind. The CFPB was born out of the 2008 financial crisis, after Wall Street nearly brought the global economy to its knees. The CFPB's job is to make sure financial products like loans, credit cards, even crypto platforms are fair, transparent, and not ripping people off. But according to Peterson, that mission is being gutted. Staff slashed by up to 90%, cases dropped, settlements with wrongdoers cancelled. In her words, wrongdoers are being let off the hook. And here's where it gets even murkier. This isn't just about dodgy payday lenders. The CFBP also handles complaints about crypto platforms. And with fraud and scams still rampant in that space, weakening the Bureau could mean even less oversight in an industry that's already kind of like the Wild West. Republicans say the Bureau's always been too powerful, too unaccountable. Democrats say it's one of the few guardrails keeping financial companies in check. And now it's become the latest battleground in Trump's deregulatory spree. Trump's own budget director, Russell Vought, even dropped major cases against Walmart and Capital One. So it's not exactly subtle what they're doing here. Now, whether Trump can legally sack most of the Bureau's staff is still being decided by a federal appeals court. A judge's injunction is blocking layoffs for now, but if that goes the other way, we're talking about the wholesale dismantling of one of America's key financial watchdogs. Now, the big picture is this isn't just about one agency. It's about whether consumer protection, especially in a fast-moving sector like crypto, is being deliberately sidelined, and what happens when the watchdog's teeth get pulled. This is a really interesting one, Susie. I'd love to get your thoughts on this. I do think there needs to be government organizations that are there to watch out for and protect consumers. This to me seems pretty unfortunate and scary.
Yes, but they also need to understand the technology that they're dealing with, which they often don't. We've seen a terrible track record where they have not helped innovation, and as a result, they've driven it overseas so that people end up going to more risky exchanges, and that's where the scams happen. If you don't have the proper guardrails within your country, then there will, of course, be chaos. And I don't think that they have the correct guardrails as it is. So I'm really torn on this one. Like I just think that sometimes they can do more harm than good, and there's an argument to ask them to maybe just step aside. However, yes, we do need some guidance, but it's got to be the right guidance. They really need to understand what the innovation is before they start legislating against it.
Yes, that's true. I think that when it comes to this particular organization, you know, companies, banks, institutions fraudulently charging customers for things, you know, there should be a body that can intervene and stop that happening and get people compensated. With things like crypto and Bitcoin, yes, I definitely agree that it's important for them to understand how these platforms work. But if people have been scammed and they're coming to this and have lost great deals of money and they're coming to this organization to help them get their funds back, they should be able to help. It does help, you know, America.
Yeah. Oh, do you know what? I'm still torn. I don't know.
Okay. Yeah.
Yeah, because I just think that people need to take more responsibility for their actions, and we live in a world where we just get constantly bailed out, you know, and we go to our governments and say, please help me, and nobody takes personal responsibility. I don't know. Scams are bad, but really people need to educate themselves and pay better attention. Saying that, if I got scammed out of a lot of money, I probably wouldn't feel that way. But at the same time, you know, where does the personal responsibility come into it?
Yeah, no, I totally agree. I think there's a lot of expectation. You definitely have to take responsibility for your own choices. But we do need protection. I do think there needs to be an element of protection.
It does.
It's this, and I'm curious to get your thought because you're advocating for policy in the UK for Bitcoin. Like, what is the balance is it just deregulation completely? Nobody, what would be your goal? How do you have a deregulated, how explain to me like the extent of the deregulation of Bitcoin and so then what that would mean for the work that you're doing?
So currently, our FCA doesn't even understand the difference between Bitcoin and crypto, and they treat all of those assets as if they have the same risk profile. That harms consumers. So this is why I say they have to understand the innovation before they start to regulate it. And within the UK, we have regulators and within regulators, and it's just like quangos of regulators, and there's no accountability there anyway. So, to deregulate something, and I don't know, it sounds like it could be better, because sometimes when you have too much regulation, there's no accountability.
Okay. Interesting stuff. Well, thank you. Okay, we're going to take a quick commercial break, and we'll be back with a segment that's all about shaking things up. We'll see.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back, everyone. Next, we'll be diving into a segment that's all about shaking things up. So Bitcoin is not just a currency. It's a mindset. It's a rebellion against the old way of doing things, a challenge to gatekeepers, and a blueprint for something better. Now, this segment is not always about Bitcoin itself, but it's always about the spirit of it. This is Buck the System. Yeah. Oh. So imagine this. You're in Kibera, Kenya, one of Africa's largest urban informal settlements, buying vegetables at a roadside stall. You pull out your phone and pay, but not in Kenyan shillings, not via M-Pesa, but in Bitcoin. This isn't a crypto sales pitch. It's already happening. In Soweto West, a neighborhood within Kibera, roughly 200 residents are participating in a pilot program led by Afrobit Africa, a Kenyan fintech company aiming to bring Bitcoin to one of the most underbanked communities in the country. The idea is straightforward. In places like Kibera, traditional banking is out of reach for many. There's no formal IDs, no access to accounts, no financial infrastructure. Bitcoin, by contrast, doesn't require paperwork or intermediaries. All that's needed is a smartphone and a digital wallet. It's decentralized, borderless, and, in principle, accessible to anyone. That's how the experiment began. Local garbage collectors, typically paid through NGOs, started receiving a few dollars worth of Bitcoin for Sunday trash collection. They became the first wave of adopters. Some now hold as much as 70 to 80% of their personal savings in Bitcoin. Even local merchants are getting on board. Dotea Anyim, who runs a vegetable stall, says Bitcoin is faster and cheaper than M-Pesa, Kenya's dominant mobile money platform. No transaction fees, no processing delays. But, and it's a significant caveat, Bitcoin is notoriously volatile. 1 week's earnings can vanish the next. That volatility has sparked concern. Critics argue that introducing a high-risk asset into an already vulnerable community is deeply irresponsible. As one Kenyan fintech executive put it, I can't afford to lose 80% of my wealth. How about someone living in Kibera? Afrobit's co-founder, however, defends the approach, insisting that the openness and the risk is part of the appeal. No gatekeepers, no bureaucracy. To support this, they've introduced Bitcoin education programs and financial literacy workshops on the ground. So what are we really looking at here? A case of grassroots financial innovation or a risky experiment dressed in digital optimism? Kibera may be at the forefront of a much larger question. Can Bitcoin offer genuine financial freedom? Or is it just the latest high-tech promise built on shifting ground? Now, I thought this was a really interesting story, Susie. I would love to hear your thoughts on it. What a fun and what an interesting case study this is.
Yeah, and it's happening all around the world. This isn't just an isolated place. People are using Bitcoin as a lifeline. I think, according to the Human Rights Foundations, over 72% of the world is under some sort of authoritarian regime. So that might be a government that is technically a democracy, but actually has authoritarian tendencies. And so if you stand up against your government, you get shut down, you're going to need to be able to transact. I mean, we even have a problem with debanking in this country. And so there's a lot of innovation happening in the global south because that's exactly where they need it. I do understand the issue with the 80% drawdowns, but, you know, day-to-day transactions, it really isn't going to be a problem. You know, on the Lightning Network, you can send it at the speed of light for a fraction of a penny, and it works. It's really, really good, and there's no intermediaries. So I would say it's definitely the beginning, and the volatility in Bitcoin is definitely reducing. So I think, you know, it's a 16-year-old asset. Of course, it's got a 2 trillion market cap. It's going to be easily manipulated at points, but as it grows, it will get better.
Excellent. Yeah, excellent points there. That would always be my argument and concern, especially when these communities where there's not much money going around. But as you say, things are starting to ease off with the volatility, and it is giving them the option to transact freely. So that is a benefit. Well, thank you so much for your time today. It's been really lovely to speak to you. We'll be having you back very often on the show as one of our key co-hosts and guests. Thank you for joining us today. This was the Roxom Report London. Next, we'll be passing off to our RoxomTV US hub, and we'll see you tomorrow for more Bitcoin and financial news. Thank you so much for watching.